Okay, everyone, this is Rob Kientz with GoldSilverPros.com, and I'm here today with Bill Murphy, who's the chairman of the Gold Antitrust Action Committee, or GATA as many of you know it, and also provides daily commentary over at his website, Metropole Cafe. Hi, Bill. How are you today?
Good to see you, Robert. Thanks for thinking of me.
No problem. Thank you so much for the work that you guys have done over the years over at GATA. I know I've relied on that a lot in terms of my research of the gold market, in particular, what goes on in the futures markets. And that's why I wanted to have you on today, is to talk about what you guys have chronicled over the last decade or so in the futures markets. Would you kind of give a brief rundown of what you guys report over at GATA and what you see in those markets?
Yeah, well, GATA actually was founded about 20 years ago by myself and my colleague Chris Powell as Secretary Treasurer, and we realized that the gold market was being manipulated, rigged after long-term capital management blew up. I could, have had a lot of experience trading commodities and around the markets, and the bullion banks were all coming in together to stop the price from going above 300. And it became obvious that they were in on it, and that they were afraid of the gold price going up because long-term capital management was short all this bullion, and that they borrowed, and the Fed turned it over to the bullion banks, and they didn't want to get killed on the trade covering the market. So I started complaining about it, and Chris said we should do something about it. And then we realized that the silver market was being rigged, but most importantly, we initially thought it was just the bullion banks. And then we realized the rigging of the gold price involved the Fed, the Treasury, other central banks, the Bank for International Settlements. It was a big, big deal, and still is.
So when did you uncover the other parties that were involved in that? Was that really at the beginning of your research, or did that come later?
Well, as I mentioned, it was the bullion banks initially we saw that they were involved, and then we realized that the U.S. government and other entities were involved. For example, in, I think, May of 1999, the Bank of England announced they were going to sell half their gold and announced it in advance, and the gold price plummeted. And nobody who wants to get the best price for their gold is going to do that. And that brought a lot of people that were skeptical of what GATA had to say into our camp, because it was obvious what was going on then. And that lasted almost another couple of years before the gold price began to take off.
Yeah, they did not. I remember researching that. They did not get a good price for the gold, and they were roundly criticized in markets for that. And you have to wonder what they were thinking announcing that sale before they did it.
Yeah, well, we know what they were thinking. It had to do with some agreement with the United States government.
Yeah. There's been a lot of manipulative activity in the gold and silver markets over the year. Of course, you had the London pool and you had the Washington agreement, and a lot of these agreements that took place before a lot of the commodities markets went really electronic, and those all have failed. Do you believe the current schemes that are being used in the futures markets are eventually going to fail as well? And if so, how do you think that's going to happen?
Well, it's a very good question. And I know it failed back in, 1972 or so, when foreign banks were buying up all the U.S. gold instead of taking dollars, and they had to let the gold price go. And I think after all this time, we're finally in a process of that happening. As many people know, gold just broke out of a 6-year base with the final move coming above 1375 or so, went up to 1440. And this was it's been quite a big change in the gold market. And I think we're in a process of the gold market blowing up in the sense of the physical supply that they've used all these years to suppress the price is drying up on them relative to demand. And it's not an overnight thing, but it's happening, and that's why the gold price action has changed so much.
Mm-hmm. Yeah, we were speaking before the interview got started about all of this leasing and physical activity in the gold market and some of the research I had done. There is a paper done, I believe it's available on Yale University Press, and I'll publish it with this interview, that basically states that when you have a lot of short futures in the market, an excessive number of short futures, especially over the amount of natural hedging that you may get in any given market, such as the commercial hedging, the producers and the jewelry makers and so on and so forth. When you have such large short positions, what it tends to do is force or squeeze out a lot of the real physical gold into the market at below market prices. And I think that's basically what's been happening. And that's why we've had such cheap gold and silver for so long. All of these short positions above and beyond what would be considered natural hedges are basically forcing this gold and silver out in the market at cheaper prices. And it seems to me that eventually that has to stop when there's just people are not willing anymore to sell their gold and silver at those prices. And I think in silver in particular, we're starting to see maybe some shortages, or at least a lot of the above ground inventory that we've had since the 1950s seems to have been sold into the market. So what are your thoughts on that in terms of the short positions that are being held by some of the bullion banks and other entities on the futures markets?
Well, it's something I go over quite a bit in my commentary, and it's really amazing. The gold open interest is up over 600,000 contracts, and the gold cartel, as I call this group, keeps selling and selling on the way up. But I think there's a problem there in the sense of what we talked about, the physical market. This is just a hunch, but gold's been acting well for the last 6 weeks out of nowhere. And just the other day it was announced that Deutsche Bank was restructuring their operations. And of course, before this was announced, they worked on it well in advance. And there's been a lot of talk in our camp about the allocations of gold. You know, for example, like say 100 to 1 of claims against the same ounce of gold. And we think that with all their huge derivatives position, that Deutsche Bank had a problem, and they have to get some of this gold back that there's so many claims to. And I think it's caused a run on the gold price. And of course, there's other bullion banks involved in this, and it could create a crisis coming up. And when it comes to silver, it's bonkers. In 2011, the open interest, which you're talking about, was around 135,000 contracts, all the way up in the end on the COMEX. That's the number of longs and shorts. Now it's 220,000 contracts, and the price is 1/3 of what it was. And you were talking about hedging before, and you're correct. When the markets go up, that's when the hedgers come in and speculators get involved, and that's natural. So the open interest would go way up as the price goes up. But here at $15 silver, to have open interest, gargantuan. It is outrageous what J.P. Morgan, which we think is the major culprit, has done to suppress the silver price. It doesn't even trade anymore. It's like a potted plant.
Yeah, and I think the two biggest entities I see on the COT reports are J.P. Morgan and HSBC. So I think they get a lot of the blame. Another interesting thing about those future markets, and what I'm wondering, if this happened to Deutsche Bank as well as may happen to some other banks, when these banks take these incredible short positions, they're not backing it up necessarily with physical positions of the actual metal. And unlike a Perth Mint, who will take a hedging position 1-to-1 to the amount of gold that they have, these bullion banks don't have it. They don't have the gold and silver. And so what they say in their prospectuses is, and on their websites is, we're going to back these short positions with our general book. And that means their banking book, the debt that they've issued, and the other investments that they have. If we get into a recession and some of this debt goes under pressure, and a lot of the banks' balance sheets go under pressure, how long are they going to be able to hold all these short positions if that's what's supporting their short positions in the gold and silver futures markets?
That's a good point. Well, first of all, I mean, who ever heard of a hedging operation being involved by an entire book? I mean, were they hedging the world? I mean, it's crazy. And I think recently, two factors that are, but people would know that would support the gold price. I call them the fear trade, which is when the stock market all of a sudden gets under pressure, and then when the dollar gets very weak. But and I think if we go into a severe recession, for example, they're going to have to, the government will go into quantitative easing to a much greater degree and print all kinds of money. And now you've got interest rates, for gosh sake, they're already low as can be, going down maybe 3 more times? Have a more bullish situation for gold. And if I'm correct about the gold physical supply gradually drying up here, a tipping point that we've been waiting for a long time, which is why gold broke out of its base, there will be a scramble for gold like never seen before. And that's what I think has started to happen. And of course, any kind of what you're talking about from a hedging operation, and these books collapsing, it can create chaos in the market.
It seems like create a short squeeze, especially in silver, because there's not enough physical to cover it that are backing those positions. If you look at what the banks are saying, they're not backing their short positions in real metal. They're backing it with their book. And so there would be a short squeeze on these metals, which would, force the prices much higher, which they would take some sort of loss on their books, I would assume, more than they're expecting with these short positions. So it could be really damaging to the banking system. And I think we're probably closer to that because over time, you've just seen these short positions grow and grow and grow, and they're not really alleviating these positions. It seems like there's just a lot of a risk on those banks. And when you add in the risk of the general economy, Deutsche Bank, I think this week was in the news for basically saying they're quitting their global equities business and they're laying off 18,000 people. They're a very, very large European bank. And so we're starting to see some cracks in the banking system. I know another crack was in China where one bank got into trouble and the government had to help out that Chinese bank because they had liquidity issues. So you're starting to see banking issues emerge across the world, especially in these producing nations, Germany and China. I'm just wondering how long before that sort of comes across the pond to the U.S. and when we start seeing it as well. But I think the physical metal definitely is not there to support these short positions. So I think we're going to see short squeezes. I don't know when it's going to happen, but I anticipate it'll happen when we see more problems in the banking sector, which I don't think we're too far from that.
Well, I think that's what I think the tell is that about the interest rate situation where they're talking about lowering the rates so much from here. Mm-hmm. At the same time, they're saying everything's great with the U.S. economy, and something doesn't smell right. Something is wrong behind the scenes, and I think they're petrified of losing control of the gold and silver markets. And with the gold, I think has started to happen, and it's why the paper selling and the short selling has gotten to such a big degree. And I think things are in the works right now, which is why they're maniacal about keeping control of these things. I mean, today was ridiculous after the Powell testimony, which they attacked gold 3 times.
Yes.
3 times before his testimony, when the paper came out of what he was going to say, then it went up, gold went up. Then when he spoke yesterday, it went down. And then today, gold was on fire last night, and boom, they knocked it down $20 off its high for no reason. The dollar's lower, the stock market's continuing to go up, and all of a sudden gold gets killed. And I think they do have a problem. You're correct. And it's in a process of kicking in right now.
Yeah, and something interesting about Powell's testimony is the question was asked to him by a member of Congress, should we consider going back on the gold standard, or does the gold standard have value? And he didn't really talk about it from a monetary perspective. He talked about it from, the Fed twin goals of inflation and basically the economy, economic production. And he made some really silly comments around, well, you wouldn't worry about the economy if you went on the gold standard. And they were just silly comments that didn't really make a lot of sense. I know that a lot of people came out after that. On GATA's website, of course, there's Dave Kranzler with an article dismissing Powell's testimony. I think Lynette Zhang came out yesterday as well, right after his testimony, pointing out that while we had gold as money, we had a much more stable economy to begin with, and we didn't have inflation. And also, Egon von Greyerz is somebody I follow quite a bit, came out with an article where he's talking about on goldswitzerland.com, where he's talking about gold adjusted for real inflation from 1720 to 2019. We're sitting at the lowest gold price dating all the way back to 1920 and then again in 1780. So gold is way undervalued in currency terms. So, I just find it interesting that the head of the central bank is attacking gold when all of this inflation is in the system and gold is priced cheaply relative to everything else. It seems like a little bit of defending his position, not necessarily being honest with the public on the situation with the dollar.
Well, way back when, Paul Volcker, the former Fed chairman, said gold up is bad, gold down is good. And it's the barometer of U.S. financial market health. And they just don't want to talk about the gold market, the gold price. My colleague, Chris Powell, said that they would rather talk, the U.S. government, the Fed Treasury would rather talk about our nuclear secrets than what's going on in the gold market. It's an amazing what a sensitive issue it is. And they refuse to deal with it. I wish that somebody had asked Powell in front of the public about whether the U.S. government is involved in any way in the gold market. And are they trading it at all? They refuse to ask this question. And what GATA's all about, we want a free gold market. That's what we want. And
sure,
trade freely and let's see what happens.
Yeah, I agree with that. And I think if you allow gold to circulate as money, because that's what's in the U.S. Constitution, gold and silver are money. That's right. And with the original Gold Act and all of the legislation, why don't we allow people to trade gold and silver as an alternative currency? And what all the fear is from the central bank and allowing that to happen. Because if they're correct and that the dollar is really the stabilizing force in the economy and gold and silver are not, then they have nothing to fear. But anytime anybody tries to print up some gold and silver and use it in a monetary format, they get a visit from the FBI. I know there's been some examples of that over the years. So, really, I agree with you. I think that we should allow alternative currencies to circulate, whatever they may be, and just let the American people choose what they want, especially since we have that precedent in the Constitution. Do you think that we'll ever get to a point where that will happen? Or do you think it's going to be the dollar and perhaps a cryptocurrency or some other, fiat type of product that really isn't rooted in natural resources?
Well, the most important issue for us is that the reason they rigged the gold price is because of what you're just talking about interest rates and the dollar, and they want to protect it. They're very sensitive, because what would happen if gold was up $150 tomorrow? Everybody we go, whoa, what's wrong? What's the problem? What's bad? And so this is why they put so much effort in rigging the price and keeping it under control. And it is so cheap. I mean, as you're talking about. And of course, if you think gold is cheap, silver with a gold-silver ratio of over 93-1 is the cheapest thing on the planet by a wide margin. And they're just going all out to keep these barometers of U.S. financial market health under control. And the reason they rig silver so much is because it's related to gold. As you said, it is money also. And they can't have gold go one way and silver the other. So once they started rigging the gold price, then they started rigging silver.
Yeah, I think silver is trading below the primary miners' costs. I know, if you look at First Majestic, if you look at Pan American, some other companies, they have about a $15 or so cost on getting silver out of the ground, out of the biggest mines. And the only way to get silver a little bit cheaper is in some of the side production you get from gold mines or copper mines, but that's not primary production. So I'm just wondering how long that can last, because eventually these silver producers, either they're going to continue taking losses on their mining activity or they're going to have to shut it down. And I just don't know when that's going to happen.
It's a good point. I mean, stocks like First Majestic have been acting much better lately. It just made a new recent high and looks like it's coming to life. And I think probably what's going to happen, silver is just going to blow up out of nowhere. Some of the kind of things that you're talking about, and it won't be expected. I mean, I've never seen anything like it, the way they have it in lockdown these days. It's getting worse and worse and worse. And no matter what gold does, they won't let silver go up. And that will change dramatically. But as you said, we just don't know when. And I'm hoping that what we're seeing in gold is extremely significant. And the buyers keep coming in on the dips. And eventually the whole precious metal scene is going to change in a dramatic way.
So if you could talk a little bit about what China and Russia are doing with gold and what you suspect their motivations are for buying so much of it in the last few years.
Well, China and Russia, continue to be buyers of gold and producers of gold. And it's a big deal to them in the sense of alternatives to the dollar, and also in terms of their political posturing with the U.S. and so on. And they know what's coming. The Russian central bank many years ago mentioned GATA in a LBMA meeting. It's the only words they spoke in English was the Gold Antitrust Action Committee. They know what's going on. I've had 3 conversations in years past with the Chinese Sovereign Wealth Fund. They know what's going on. They know how cheap the prices are. They know they're rigged. So they just keep buying and buying and buying. And maybe one of them will pull the plug someday, or it could be. And they will really benefit from much higher gold prices, so they want it more than anybody.
Yeah. I was also reading GATA this morning, and it seems as though the LBMA has come out and said there's legislation around liquidity of the markets and kind of tightening up requirements for liquidity. And LBMA, the Bullion Management Association over there in London, is trying to get out of these requirements. What do you suspect is their motivation for not being part of this new legislation and liquidity in the markets?
That's a good question. I really don't have the answer. I know that they've been all over the place when it comes to what's going on in the gold market, and it's very difficult because, I mean, they used to report, for example, their daily fix every day to the public, and now they don't do that, and it's reported the next day, and it's very difficult to know what's really going on there. The good news is that in terms of London, is that a member of Parliament has asked the Treasury if they could investigate the gold market over there for manipulation. And that's a new development. And thanks in part to my colleague Chris Powell and a fellow named Harvey Organ, and they've done great work to get that into the public eye over there.
Yeah, and I think Harvey had documented recently that a lot of the contract positions on the COMEX have been moving over to London. So it appears as though some of the short positions are moving from one market to another. I have no idea what the significance of that is, but he's been reporting on that there for a while. So I'm wondering if a lot of these short positions are being moved over to that market and they just don't want new regulation as to position limits or how much liquidity they have to put up per contract, because I know a lot of the futures contracts with a little amount of money, you can control a lot of the commodity over on those markets. And I wonder if the two are related.
Well, that's what the futures trading, of course, is all about, the leverage. And what you're referring to with these exchange for physical operations, which are quite complicated. The basic exchange for physical is quite simple, but what's going on here, and it's been going on for 2.5 years or so, and they're massive, and they haven't made any difference to date yet whatsoever. But maybe all of a sudden that's what this physical market drying up is all about, all these shenanigans of what's going on, and it's quite complicated. But if you put it all together, it suggests that what I mentioned earlier, that the gold cartels, I call them, has a problem in the physical market finally after all these years.
Yeah, there are a lot of people in the general financial press that don't seem to want to believe that there could be any manipulation of commodities markets. There is a paper on Yale University Press talking about manipulation of the commodities markets dating back to the 1870s. And I'll post that as well as a link underneath this interview. And there's been a lot of work done. I think Teddy Roosevelt, when he was president, really was spearheading legislation. I think there are 30 pieces of legislation passed during his tenure alone regarding anti-manipulation practices in the futures markets. But there's a 140-year history of manipulation in futures markets going on, and we know that, and the government knows that. But a lot of the financial press nowadays doesn't want to admit that that's going on, whether it be LIBOR market rigging or Forex rigging, or especially in the precious metals markets. And I was having a conversation with someone the other day. He's very popular in the financials markets, and he writes for Seeking Alpha, has a really big following. And he was saying, yeah, there have been legal actions around spoofing by these banks, but spoofing goes both ways, so it's really no big deal. What do you say to people who say, you know what, manipulation goes both ways, or we're not worried about the manipulation in the market? How big of an impact does the manipulation have in the commodities markets?
Well, I can speak specifically on gold and silver. I mean, that's what they're all about. I mean, otherwise the gold prices would be sharply higher. And it's very simple if you watch the way gold and silver trade at times, how manipulated the market is. And it is the major thing about these markets. And that's what GATA has been all about these 20 years to expose, to end it. And it's amazing what a taboo topic it is that you can't even get the press to talk about it. To mention GATA. It may be fine if they had he said, she said, he believes this, he believes that. No, not allowed to be mentioned. It's so sensitive, and you're correct. It's that big a deal, and when it blows up, it's going to be a scandal that'll be much bigger than Enron and Bernie Madoff and those sorts of scandals.
Yeah, it seems like just by the numbers, it's a bigger Ponzi scheme than any of those others that got covered well. So what else are you doing in terms of Metropole and GATA? Any other news that's come out recently that you want to talk about and provide to our viewers?
Well, I write about the manipulation every day and what gold and silver are doing, and it's been a fun thing to do for the past 20 years. And my colleague Chris Powell is trying to get central banks interested, and the one central bank is interested in speaking to us, and we do go to conferences like in New Orleans to spread the word, and we do what we can to be on the internet so that people can find out what's really going on. And it's been some haul, and we expect someday that people are going to understand what a big deal it is. And it's probably the most important thing to know about the gold and silver markets and why they're going to go up. Nobody wants to hear about prices being suppressed, but if you understand it's going to end someday, and what it means is the gold price soaring and silver going bonkers, it's something that keeps people in the game.
Yeah. So definitely pay attention to the GATA website. I know you're going to be going to Brian Lundine's conference in Louisiana here. When is that for people who may want to attend?
It's in the first few days in November.
Okay, good. So we'll have that here in a few months.
Okay.
Okay, great. Well, thank you so much, Bill. I appreciate your time with us. I appreciate the information you provided. Also, all the insight you provided over the years definitely was a big help for me in getting started in the gold and silver markets. And I appreciate all the efforts you and Chris and others have put into that.
Well, you're one sharp cookie.
Oh, well, thank you very much. I appreciate that. All right.
This has been a Gold Silver Pros production. Please subscribe to us on YouTube and sign up for our newsletter on goldsilverpros.com.